Hey everyone, welcome back to Corporate Decoder. Today we're diving into Kewaunee Scientific Corporation's latest financial filing. It's a bit like peeking into a lab, but instead of beakers and chemicals, we're looking at dollars and cents to see if the experiment called business is cooking up something good or if it's about to blow up in their faces. This is a Form 8K, also known as a current report. Companies use this to tell investors about big news that might move the stock price. Think of it like a breaking news alert from the company itself. This one is dated March 12, 2025. The main event here is that Kewaunee Scientific just dropped a press release announcing how they did in the third quarter of fiscal year 2025. We're going to dig into those numbers to see if they're popping champagne or reaching for the panic button. So a press release is like the company's official statement, and it's packed with information about how the company did. Let's dive into that. Alright, let's get into the numbers. For the third quarter of fiscal year 2025, Kewaunee Scientific reported net sales of about $43 million. Net sales is the money the company made from selling its products after subtracting things like returns and discounts. Now, to see if that $43 million is good or bad, we need to compare it to last year. In the third quarter of fiscal year 2024, their net sales were around $42 million. Okay, sales are up a little. What about profits? Net income for the third quarter of fiscal 2025 was $860,000. Net income is the company's profit after all expenses, including taxes, are paid. It is basically how much money they get to keep at the end of the day. In the same quarter last year, net income was significantly higher at $1.6 million. So while they sold more, they made less profit. That's a bit of a red flag. It tells us they might be facing some issues with cost competition, or maybe they just had one-off gains last year. Let's zoom out and look at the bigger picture for the 9 months ended February 28, 2025. Net sales were about $134.2 million. That's up from roughly $127.3 million for the same period last year. So far, so good. Net income for these 9 months was about $1.9 million. However, here's that red flag waving again. For the same period last year, net income was $2.9 million. They are selling more, but they are taking home less money. Something is cutting into their profits. The press release mentions that the gross profit for the quarter was about $9.93% of sales. Gross profit is the revenue left after subtracting the cost of goods sold. It gives you a basic idea of how efficiently a company is producing its goods or services. Last year, it was $10.4 million or 24.8% of sales. That dip in gross profit margin is a problem. It could be due to higher material costs, lower selling prices, or maybe they had to spend more to produce each item. Selling, general and administrative expenses increased. These are the costs to run the business, excluding production. There was also an increase in the reserve for deferred income taxes. That's a bit complicated, but basically it means the company expects to pay more in taxes in the future due to something that's happened now. The company highlights that its backlog remains strong. Backlog is the amount of orders they have to fulfill in the future. So what's the story here? Kewaunee Scientific is selling more, but it's making less profit. Their costs are going up, and that's squeezing their margins. While a strong backlog is good news, they need to figure out how to turn those sales into actual profit. Now, let's step back and think about Kewaunee Scientific. They design and make lab equipment. That's a pretty specialized market. They face competition, and they're dealing with the same global economic pressures as everyone else, such as rising costs. The drop in profit margins is worrying. It means they are either spending more to make their products, or they are not charging enough for them. Maybe both. They need to look closely at their expenses and see where they can cut costs or improve efficiency. They might also need to consider raising prices, but that's always a risky move. The increased reserve for deferred income taxes is also something to watch. It suggests that the company's tax situation is getting more complex, and that could put a further strain on their profits in the future. Overall, Kewaunee Scientific has some work to do. They are not in terrible shape, but they need to get their costs under control and start turning those sales into real profits. If they can do that, they should be able to weather the storm. If not, they could be in trouble. Thanks for watching. If you found this breakdown helpful, please hit that like button, leave a comment, and subscribe for more corporate deep dives. Until next time.